We're going to be talking now about registered funds, and this is a method that you can, if you have $100,000 sitting in any of your registered funds, which are your retirement savings plan, your TFSA, your tax-free savings plan, and your RRSP. Registered funds, and this is a method that you can, if you have $100,000 sitting in any of your registered funds, which are your retirement savings plan, your TFSA, your tax-free savings plan, and your RRSP, your registered educational savings plan. If you have any of those registered funds and you have $100,000 sitting in there right now, if you're diligent enough to add $6,500 every month, you are able to, in your year 9, you are able to withdraw $100,000, or you have to put this money into investments that pays you at least 20%. Okay? In your year 9, you are able to start withdrawing $100,000 tax-free. Technically, you're paying yourself this $100,000 every single year tax-free. So I'm going to put some numbers here, and I want you guys to work with me. I'm not gonna put all the numbers. You guys are going to be crunching your numbers. So in your year 1, this is year 1, you're putting $100,000 down. You have $100,000 in your account already, in your pots, and you're going to invest it with a land developer. So any land developer, you can put it with even apartment buildings. People that invest in apartment buildings such as me, you can put it there. And if you're making 20% per annum, it's not common to make 20% on apartments. It's usually about 15%, but in some weird cases, some very sweet deals, you can get 20%. You could also decide to just be investing with developers. Developer pay anywhere between 20 to 25%. Okay, so you put it, you get at least 20%. In your year 1, you're going to be having $126,000. So this is $100,000 multiplied by 20%. It will give you about $120,000 plus your $6,500 that you're going to add to that. That gives you $126,500. Okay, that's how much you get in your year 1. Okay, and again in your year 2, what are you gonna do? You're going to add to this. You're going to multiply by this by another 20%. You're going to add your $6,500 into this, and that's going to give you $158,000. How much is that? $158,300. Okay, that's how much you get in your year 2. In your year 2, at the end of year 2, this is how much you'll be getting. So I want you to do year 3, year 4, year 5. Let me just do year 6 with you guys. So in your year 6, if you do your math right, you should be getting $363,142.4. Okay, this is how much you should be getting in your year 6. So if you do your math right, you should get into $363,142,000. Okay, so in your year 6, so you're going to do the same in your year 7. You're going to do in your year 8. In your year 8, you should be having $537,225.8. Okay, I want you to withdraw $100,000 from that, and you should be having $437,225.8. So in your year 9, you're going to be withdrawing $100,000 for yourself, right? So you start paying yourself at this point. So if you do that correctly, you should be getting $437,222. That's $437,225.8. And in your year 10, so with this also, you're going to multiply, of course, by your 20%, and then you're going to add your $6,500. So $6,500. 5. This is 6,500. Okay. If you do this math, and at the end of your year 9, you should be having 531,170. Okay, that's how much you should be getting in your year 9 after you withdraw this amount. And in your year 10, you're gonna do the same thing. You're going to withdraw another $100,000 for yourself for doing a good job and staying with this plan. And by the time you do that, you'll be having 431,170. And again, you're going to reinvest it with 20%. And what happens after that is you add your $6,500. Okay, and once you do that, you should be able to have 523,904. Okay, so what happens is you start deducting after in your 9th year, you're gonna start deducting $100,000 every single year, and you're going to be reinvesting the money as usual, but you're able to deduct $100,000 tax-free every single year, and just reinvesting your money and just enjoying life. So if this is one of the neatest strategies that I've seen. In order to be able to do this, of course, you have to find an investment that pays you 20%, and that's probably one of the reasons why you should join the mastermind, to get opportunities and deals like this. If you are in Canada, or even if you're in the US, you can probably find something similar as well. But if you are there and you've been working for the last 10 years or 15 years, you probably have $100,000.
Hi there, my name is Deborah Ojo from DeboraHomes. Are you trying to sell your house right now? I am going to be helping you to list your house to sell it for maximum profits. I am talking about professional staging. I am talking about exposing you to the over 1,000 agents that I have in my office. I am talking about exposing to the buyers that are already ready to buy right now. So if you are sitting on a buttload of cash, you need to be contacting me right now for a customer's marketing plan that is going to help you to get a maximum of your price. You need to be contacting DeboraHomes. Thank you.
Sitting there. But yes, $100,000 is the starting point, and you can reverse these numbers. It doesn't have to be just exactly this. It could be something else, right? You can put your money in RRSP, you can put it in TFSA, you can put it anywhere else. This is mostly for TFSA because TFSA is tax-free, so you're able to withdraw this money tax-free. If you put it in your RRSP, depending on your income brackets, which definitely you want to speak to your accountants. I am not an accountant, so please speak to your accountants. But if you are putting this in your RRSP at the end of the year, when you finally retire and you're taking this money out, you might have to pay some taxes. But I will put it in my TFSA account or my RRSP. That way I'm not paying any taxes. Okay? I hope that makes sense. Let's talk now about credit cards. Okay? I did mention that I was going to talk about credit cards as well. So let's say you don't have any money. You have just a deal. You've done your numbers. You've done all your analysis. And the number does make sense. And now you're just trying to find out, how do I fund this deal? Okay? You only need about $25,000 and you have 2 credit cards that has $25,000 limits. So these are credit cards. This boxes represents credit cards. Okay, so you have these 2 credit cards. You also have your business checking accounts. I recommend this, especially if you're going to be actively investing in real estate. You should definitely have a business checking accounts. But speak to your accountants about that as well.